So hello. Now I hope everybody's had a great weekend. This is 50 pips, 9th of June 2013. I'm not making trade calls or recommendations, just reviewing the charts to see what we can expect to see in the week ahead. Again, I'm going to try to keep this very quick and simple. Again, the fact that you're watching this means that you've read and understand all the disclosure and disclaimers, and this is just for educational purposes only. So let's do this. Let's move ahead quickly and see what's going on. First things first, let's look at the ES. What's happening on the ES? Well, the ES, basically, we caught a very strong bounce, very nice bounce at a very technical level. So basically, we got this sharp sell-off, which moved in a very nice manner. So basically, nice ebb and flow here. We got some two-sided action, and then we started to sell off quite aggressively. Now, what we said last Sunday was, again, keep an eye, if you're on the 4-hour chart, on how we behave on the approach to this 200 on the 4-hour. And what happened is, bam, really knife through butter, very aggressively. We moved straight down into our support zone, which we had highlighted 1607, 1593. Okay. And what was apparent, I think, especially if you were watching the tape action when we put it here, is, at least to me, is when we move back down, we could get no more pressure, right? No more, the market couldn't draw in any aggressive selling. So basically it was just covering some new buyers coming in. Very difficult to get any kind of Momo at new lows. And when you see this kind of action, also because it's been a hard trade on the short side for a while. So, you know, shorts getting paid when you see a lack of traction to the downside at a key level, right? Previous resistance, then back support. So this whole zone, the shorts were quick to cover, new buyers coming in, and bam, right back into. We had a pivotal level we're looking at, 1631s. We shot right through. So I think going into the week now, it's really all going to be about these 1643s, right? 1641s. So look for this to be really where the action is played. So you see this was an interesting resistance before. Now, if we go into Monday and price starts to trade above that quite aggressively, or we get a good bid tone, then I would not be surprised to see us try and move all the way back into 1670s, 1666s this week. Now, if we get some aggressive selling coming in, then I think, you know, we could make a quick run down for those 1630s. If we get selling below 1630, we could even make it back down into 1617s. But I think this is pretty much going to be the key areas to watch, right? If we start to rally, break back, watch how we behave above into these 1660s, 1670s. That's going to be very key. Why? Because this is the resistance that you see sharp selling, profit taking coming in. This is the level to watch. And to the downside, 1617s, right? This was an interesting level. This is once we pop back up, very shallow dip, buyers came in and rammed it back up. So these are the levels I'm going to be watching. 1641, pivotal for momentum, bull bear line for the week. Base support, 1617s, I'll be watching it. And the upside resistance zone, 1666s into 1672s, okay? Then let's just do a couple of the commodity currencies before we do euro and cable. What's going on Aussie? So basically this is the chart we had up last week, and we said basically 95.80s are going to be pivotal for Momo, and basically we're just stuck there, right? Very difficult to get traction to the upside, still pressing lower, but not really getting any new traction. Now, I'd expect this to try and gap down, maybe take some stops out to the downside overnight, but basically, as long as we don't close below the 93.90s, especially from a daily basis, this could keep on bouncing and being attractive back into these 95.80s, which is going to be the bull bear line. So I've got to the upside 98.40s, 95.80s, 93.90s. Now, if you just want to step back and look at it on a weekly, it's very clear why this is such an important level. And we discussed this at length. So again, you can look at this chart, but basically a lot of support and resistance. This is going to be a key zone, both in terms of resistance and support. CAD, what's going on CAD? So basically what we said on CAD, and I kept on going about watch 0270s, 0270s, 0270s. That's been such an important level for so long, right? And once we failed to get traction to the upside, we started to move down. We said, keep heads up. look at how we react, right? On the upside as resistance, very defended, very, very aggressively. So if this is going to continue the upside rotation with a good, good pace, we'd expect the buyers to come in and support this strong. What happened? Bam, aggressive move down. Once we move back in, it got sold again. Knife through butter right into this lower edge here. So very technical, very nice area again. So going into the week, this remains the bull bear line, bearish below, bullish above. To the downside now, watch the 0150s. If we going to get a bid shortly, even on a gap down or something, that's probably the most I would say the most obvious level to look for support going into the week. So as long as we can't break and get a daily close below there, I think those 0270s might still continue to attract, and that's going to be the bull bear line for the week. But if not, my outlook is still in play. What we've been discussing is still move, but especially if we get a daily close back down below those 0150s, I expect to see acceleration to the downside, and possibly the market trying to make a run for this 200-day moving average, which is going to start to move upwards towards those 0060s, okay? Now, cable. What's going on cable? So cable's been extremely technical, very nice rotation to the upside, and basically we took out those 55, 80s, those 56s being defended, right? We talked about this at length. The key zone to watch, and we discussed this so many times, was how we behaved at those 52 into those 52.10s, right? Especially once we got back above. Either we were going to hold below or hold above. This was going to start to generate bullish Momo, and we were looking for how it was going to behave at all these key levels. Just very aggressive move. And as we said last Sunday, right, pretty much everybody and their hamster and their everybody was short. The easiest trade or the no-brainer trade was short cable. And we said, watch out going into this week, especially if the data starts to look good. This could start to catch a very aggressive bid, right? And especially for that, a lot of people were saying also, why aren't you going to short, or why don't you expect the 50 back to hold, right? Well, the 50 back was really not a level we'd be looking at to hold or to trade, simply because this move from lows to highs came back up and got sold. So the 50 back got triggered here. This was the chance the shorts had to press this down and try to continue that extension lower, back into those lows and into those 144s, etc. But the fact that we came back down and we made, again, higher lows, especially caught a bid exactly in that zone. We discussed this zone where the market had got a bid so many times, uncomfortable, holding below, bam, 52s, holding above, and right here. So this is not a high odds trade, and what we would expect after this is the price to be very aggressively attracted to the 200-day in this kind of action, especially as the market is really sitting shorts and we need to see covering coming in. So bam, we're right in here, and you see the sellers came in trying to cap it below. So what I would really be focused on this week, especially in terms of just Momo, is do we get daily closes above or below? Now I expect we probably see some kind of gap down, some kind of move to the downside, try to trigger lower. But really, unless we start to see some moves below the 54.50s and daily closes below there, I think the path of least resistance is still for some unresolved business around this 200-day, and that's the fight I'd be looking at going into this week. And as long as we close, and even if we pop above, we close below these 57.60s, we could see more pressure to the upside. But if, especially beginning of the week, we get some more good data, we start to press higher, then a daily close above 57.60s, then I would really not be surprised for us to try to make another run back into the 60s and ultimately into the 63s. So very, very important level to watch for in terms of momentum and flows going into this week, okay? And last but not least, what's going on with Euro? So in terms of Euro, if we look at this daily, basically our outlook, and again, we've labored this many, many times, we're looking for this to complete and go back into the 132.00. The broader range we were looking at was the 132, 130, 128, right? And we basically, I explained also in the live session we did for the last Sunday, right? Why, to me, it looked like price was holding a whole series of higher lows, and that every time the shorts had a chance to really press this, the best a kind of confluence of levels or data and et cetera, to really have a great chance to really knock this through these 128s, we kept on holding these higher lows. And so we were looking for this 50 back to continue to be the key fib to watch, not the other ones. You can go back, look at the recording. We discussed all the other ones. It's on the blog. And we're looking for this to rotate back into the 132s, and then this was going to be the pivotal level, right? So right now, the rotation is clearly in play, and as long as we hold above this, we'd expect this to continue to try and rotate higher, ultimately into the 136. Now, just to give you another outlook on the we posted the weekly chart to the broader outlook on and the broader range on the weekly. Basically, the broader range on the weekly is 128s, 136s with these 132s in the middle. Okay, it's a bigger range, but it's a weekly chart. And what we're looking for this is for a move back into the 200 on the weekly. So this is really going to be the key level to watch for this week. And this is coming in pretty much now, well, around those 3460s, call it 3450s, whatever you want to call it, but keep an eye on that 200 on the weekly. So if we close above or below that on the weekly, that's going to be very important, especially if we close above. This could continue to hold a very, very strong bid tone. Just a reminder, the current move that we're in, so this 50 back, this is pointing to ultimately targets of a move back into 141.10s. Sorry, 141.06s. Okay, so that's the move. That's the target for that move there. So just to make sure. But again, we discussed those in detail in the other recording. So again, that's what I'd be watching. And going into the open here, again, I wouldn't be surprised to see the market try to trip some stops to the downside. So if you look at it on a 4-hour chart, like what I would say is the focus is likely going to be, you see when we started to press here, this is a key level for the week, 3050s, but that's a while away here. What I would be focused is all this action around these 3150s. It dropped down to a shorter time frame, be easier, but basically this was a key level important. So I'd expect the market to try and come down and take out clear stops and get momentum going below the 3150s. But if it can't, I think we'd see a move back into the 32s very quickly. Bull bear line going into the week for upward rotation. 3140s, probably 3340s, probably the next level to the upside. Okay. So I hope that was quick and easy. So I hope everybody's going to have an excellent end of the weekend. Have an excellent week. Again, don't be shy about sharing the content if you like it. And I'll see you guys for London Open tomorrow. Keep it tight. Have a great day. And thanks for listening. Bye-bye, guys.